Our objective for today is to thoroughly analyze the charts of various currency pairs, identify around 3 to 4 potential trade setups, and capitalize on them. This seems to be a resistance zone. Let's see what's happening on the higher time frame. The 30-minute time frame also features a bearish pin bar. Hello, my name is Mary and I can be your personal trader. To do so, subscribe to my YouTube channel where I post new interesting trading videos almost every day. Also, please subscribe to my Telegram channel where I provide high-quality signals that we can work together on. Today, I will show you an example of trading session that I regularly conduct. The example is practical and I will also explain each of my actions. We're kicking off our trading session on pocket option. Our objective for today is to thoroughly analyze the charts of various currency pairs, identify around 3 to 4 potential trade setups, and capitalize on them. We're starting with the Euro and Canadian dollar currency pair. The price approached the recent high but couldn't break through it to move upward. This seems to be a resistance zone. Right within it, a bearish pin bar has emerged on the 5-minute time frame. This might indicate a potential short opportunity. Let's see what's happening on the higher time frame. The 30-minute time frame also features a bearish pin bar. Additionally, the price is close to a resistance zone that has already triggered a reaction. Since the high hasn't been updated, it suggests the price is moving downwards. The overall trend is downward, although the local trend is upward. This presents an intriguing scenario, but there is a crucial point. The fact that the price hasn't breached a new high implies the significant players haven't yet triggered liquidity above the resistance zone. There is likely a cluster of stop-loss orders that these significant players might want to activate. Simultaneously, a head and shoulder pattern is beginning to form on the 1-minute time frame. It's potentially forming... No, not quite yet. We need to wait a bit more. For the head and shoulders pattern to become fully formed and tradable, the price should decline further. In short, the price has updated the recent low and broken through the so-called neckline level. Until this level is breached, the head and shoulders pattern cannot be deemed a reliable signal. Nevertheless, I'll go ahead and enter a $300 short position for 3 minutes. I do not want to miss out on this interesting setup. After all, we have a bearish pin bar, which provides additional confirmation of the downward move. Okay, I'm executing the trade right now. Should the price rise, let's say, to create a new high and trigger liquidity, then in that scenario, I'll simply initiate a counter trade and still profit from this situation. Let's now await the trade outcome. I'm executing an offset trade of $600 for 5 minutes, opting for a short position. I shouldn't have entered before the pattern was fully established. This trade will end in a loss in 30 seconds. Time to analyze what transpired. So on the pocket option chart, it's evident that the price surpassed the previous high. The significant players acquired liquidity, necessitating a push in the price upward direction. Yes, I mistakenly sold at the bottom like a novice. Nonetheless, the liquidity has been absorbed, positions have been established, and the price is poised to decline. Hence, I initiated a short position upon detecting initial signs of price weakness. Often the analysis is accurate, but the entry point or timing isn't. Such trades should be offset. Now let's observe the outcome. As planned, everything played out and the offset trade concluded profitably. I netted $486, converting the previous $300 loss from the initial trade and securing an additional $186. The price follows suit with the technical analysis. Initially, it ascended to secure liquidity above the prior high. This mirrors the approach of major players when initiating significant positions. Following this move, the price commenced a descent toward my open position. This aligns with the conduct of a skilled trader, anticipating the actions of prominent players and trading in sync with them. Now let's analyze other pairs and explore fresh opportunities. Let's delve into the Australian dollar to Swiss franc currency pair. While the market is displaying considerable volatility like in a distinct trajectory, it's an exceptionally uncertain scenario. On a chart of this nature, it's wiser to refrain from speculation and evade unnecessary risks. Now, shifting focus to the euro to Australian dollar currency pair, a viable chance to initiate a short position arose, yet regrettably, I missed it. Presently, it's too early to establish a position as the price has taken a steep dive. Observing the British pound to Canadian dollar pair, I've outlined a historical trend here. The chart presents an intriguing outlook, warranting vigilant observation to decode ongoing developments. Remarkably, the price is on an upward trajectory. The hourly time frame reveals the price has attained the prior peak. Moreover, it has even slightly surpassed it. Effectively, this signifies securing liquidity from higher levels, a notion I previously mentioned in the earlier trade. Notably, there is a potent magnetizing zone below for the price. Two equivalent lows have taken shape in that region. In theory, after amassing significant positions while securing liquidity, the price should reverse and pivot in the opposite direction. Overall, the area could mark a market reversal point. Nonetheless, the retracement hasn't initiated yet. For now, the price has merely refreshed the peak, potentially setting the stage for a reversal. In the grand scheme, the circumstances appear propitious. We can explore validating indicators for entering a short position and anticipate a downturn. On the 5-minute time frame, a bearish engulfing pattern has taken shape. The red candle has completely enveloped the preceding green one. This serves as the initial signal endorsing a short position. The bullish momentum is diminishing, setting ground to bearish forces that are pressuring the price downward in line with convention. My inclination is that the price will gravitate downward shortly. Adding to this, a bearish pin bar has manifested, further urging me toward a sell stance. Over the next 10 minutes, the chart appears predominantly bearish. While it's conceivable to enact a short position here for a swift gain, a measured approach is prudent. The price has approached the zone of the local peak on the 1-minute time frame. Allow me to emphasize the presence of liquidity. It's a constant in the vicinity of local highs and lows. Likewise, liquidity is evident here. Additionally, to the left, a cluster of liquidity is evident beyond the descending trend line. Given this backdrop, a price decline could materialize soon, as this liquidity cluster exerts a robust magnetic pull of the price. So here's the strategy. Initially, the price will update the local peak level. This is when significant players will accumulate liquidity and initiate positions. Then the price will embark on a downward trajectory. Within this movement, the prominent traders will amass liquidity that has amassed beneath the trend. With our plan in place, let's transition to the trading platform and prime the currency pair. Once the signal to enter the trade arrives, I can promptly establish the position without any delay. Speed is of the essence since every moment matters. It appears the process has commenced. On the 1-minute time frame, an inside pattern has taken shape. Depending on the outcome of the current candle's closure, I might secure confirmation for the trade. In the next 30 seconds, I'll decide whether to initiate a short position from this level as the price moves to collect liquidity from below. Alternatively, I could choose the resistance level above, which I've highlighted in red. There is a possibility that the price will first ascend to trigger stop-loss orders in that region. Indeed, that seems to be unfolding at this moment. Swiftly, I'll commence a $300 trade for a 3-minute expiration, opting for a short position given that the price has indeed breached the previous peak. At this juncture, I anticipate the price will trade within the range momentarily before undergoing a swift decline to accumulate all the liquidity positioned below the local upward trend. Well, let's remain patient and observe the trade's outcome. As anticipated, events unfolded as projected. The price ascended, underwent a brief trade phase, and subsequently plummeted. The trade concluded successfully, yielding a confident profit. The analysis of liquidity results effectively predicts price movements. For skeptics of technical indicators, I recommend delving into resources about smart money strategies. All in all, this marks the second profitable trade, and my trading endeavors continue. Now let's direct our attention to other charts, seeking fresh avenues for profit. The current market climate is characterized by tranquility and predictability. I intend to execute 2 more trades today, capitalizing on our swift and prosperous momentum. Yet again, I am encountering a lack of intriguing prospects. However, there is potential profitability on the horizon with the Swiss franc and again against Japanese yen currency pair. Continuing the scrutiny of liquidity, I'll establish a market for this high level. Typically, liquidity aggregates here, representing the target towards which the price gravitates during the entire bullish phase. Now it's time to examine what materializes on the lower time frames. In addition, I'll overlay Fibonacci levels across the entire downtrend. This strategic step will elucidate potential points of the retracement initiation. The predominant trend remains downward, and the present upward movement is merely a conventional correction. According to Fibonacci analysis, the price has reached the golden zone above the 0.618 level. Within this zone, we might contemplate establishing a position should the price respond as anticipated. Zones above the 0.618 level invariably form robust resistance zones. Furthermore, in this realm, significant players are currently amassing liquidity prior to exerting downward pressure of the price. Hence, I'm shifting to pocket option to initiate a short trade for the Swiss franc against the Japanese yen currency pair. I anticipate the price will react to the resistance zone. Indeed, it might already be underway. Now we await the conclusion of the trade. As expected, the third trade culminated with a confident profit. I entered the short position near the pinnacle, and throughout the trade, the price sustained a level beneath the entry point. My earnings totaled $240, a commendable profit margin. Given the current favorable and foreseeable market conditions, I'm poised to explore novel prospects. I aim to secure a fourth profitable trade before concluding today's trading session. An intriguing scenario unfolds with the Canadian dollar against Japanese yen currency pair. On higher time frames, the price has penetrated liquidity zone. On 1 minute time frame, an evident inside bar patterns take shape. I'll await the completion of this candle for a clear signal. Only 5 seconds remain. There, it's concluded. Subsequent to the inside bar pattern, a bearish engulfing pattern has emerged, or more specifically, its variant known as the PPR pattern. This stands as a robust indicator of a potential price reversal. Hence, I infer that significant players have extracted liquidity coinciding with the formation of this pattern. Evidently, the price is set to decline. While the overarching uptrend may remain intact, an impending downward correction appears likely. Thus, I'm initiating a short trade. I'm configuring the expiration time to 3 minutes with the usual $300 amount. Assuming all unfolds as projected, the price will aim for its nearest target, situated at the level of the previous throw. A closer examination reveals this to be an intriguing zone. The price previously attempted to breach this level only to swiftly reverse upward. I suspect sizable players capitalized on liquidity within that zone. The price initially established a lower throw, subsequently ascending and creating a higher peak. However, concurrently, the significant traders gathered a meager amount of liquidity from the lower region. Just beneath that nadir, there exists another sector where numerous participants likely initiated long positions or positioned their stop-loss orders. Adhering to the rationale of dissecting the market through the lens of smart money principles, the strategy unfolds as follows. Our broader trend maintains an upward trajectory, a fact not to be contested. Primarily, the price adjusted its lower limit to accrue positions from feeble bulls. The bulls found solace in this shift. Then the price ascended, establishing a peak while absorbing liquidity from vulnerable bears. The subsequent logical progression involves a swift plunge to accumulate maximum liquidity from proximate bulls who entered positions and positioned stop-loss orders beneath the throws formed post-rise. Hence, I initiated short trade within the overarching uptrend. I endeavored to trade in alignment with the substantial players who exhibit behaviors delineated by the smart money paradigm. This strategy manifests impeccably. Now, let's weigh the interim outcome. Subsequently, the fourth consecutive trade culminated lucratively. I procured an additional net profit of $249, thus drawing the curtains on today's trading session. Thank you for your attention. It's very pleasing to see your subscriptions, likes, and comments. Your activity truly brings me joy. So please make use of all YouTube's features and make me happy. If you want me to be your personal trader, follow the link in the description to my Telegram channel and subscribe. Let's work together. See you soon. Goodbye.